Hello and welcome to Market Today. I'm Siddharth Zarabi, and joining us now is Amur S Lakshminarayanan, the CEO and Managing Director of Tata Communications. Welcome to the show, Amur. A very good morning to you. I want you to begin by sharing with our viewers the key highlights of the first quarter's financial performance.
The quarter has been very good in terms of we have seen an uptick in all the parameters. In Q4 last year, as we ended the quarter, I think the data growth, we had seen a deceleration both in digital as well as the data. This quarter, we have seen an uptick on the data growth. Year on year, the data growth that we have seen is about 20%. Our digital portfolio has grown over 50%. Margins, which that we had talked about last year, was on a declining trend, and we exited at close to 18.5% EBITDA margins. And this quarter, we have seen an uptick to EBITDA coming to 20%. So I think on all the parameters on the top line and the EBITDA margins, we have done well. Of course, the PAT, there are both the tax as well as the depreciation as a result of bringing in Kalera that has added to the depreciation. So EBIT and PAT are yet to pick up to the previous levels. But we are very happy with the execution of the strategy, and the teams have done a phenomenal job.
Clearly, things in place. I want you to focus on the digital aspect. There's been good growth there, and we can clearly see nearly 52% on an annualized basis. What has contributed to this momentum, and what do you see happening on this front in the remaining quarters of the year?
Yeah. Siddharth, I think the digital portfolio has been aided largely by the acquisitions. So the Kalera acquisition has contributed to a significant jump in the growth. But having said that, our cloud and security portfolio has also grown very well. Our connected solutions, the MOVE portfolio, has delivered a very good quarter-on-quarter and a year-on-year growth performance. Our media portfolio has seen a significant jump both on a quarter-on-quarter. So we saw a 9% Q-on-Q jump on our media portfolio, and a good year-on-year, a double-digit growth on a year-on-year as well. Again, on the back of some of the good marquee events that we did in the quarter, the ICC T20 being one of them, and the Formula One races kicking off. So all of that helps. So I think we have had a good run with several of our portfolios. Our next-gen connectivity was a bit muted. Again, largely on client-specific issues and one-offs that we had. I wouldn't read much into it. So I think we have had good momentum on next-gen connectivity last year, and we anticipate the next-gen connectivity will deliver well in the coming year as well. So overall, I think most of the portfolios within the digital are beginning to pick up and do well. The second aspect that I would call out, Siddharth, is also the international markets. I have been always saying that we want to retain our enterprise leadership position in India, which we are. Internationally, we are a challenger position. We are fairly small. The white space is very large there. And that is why we started investing in sales teams outside of India in those markets and increasing our footprint. And that has also yielded in results in terms of our international share of our revenues today stand at 58%. A year or so ago, we used to say it's 50-50. Now it's 58%. So I would say, all the indicators of performance in our strategy are tracking to very good performance levels.
What is the current demand outlook, and what are the clients, especially international clients? You just mentioned that, telling you about how future order growth and demand is likely to be.
Firstly, on the order book has jumped significantly for us this quarter. We don't call out the order book ourselves, but I've been saying that our order book has been flattish and the decision-making has been slow. This quarter, our order book has jumped, albeit on the back of a couple of large deals. We had a fairly significant deal with a BFSI segment delivering all their SOC and security and cloud services. We've had one good win, which we announced to the market with World Athletics. Even though the World Athletics was only beginning in Tokyo next year, we have signed and closed the deal, and that contributed to the order book. And there is, so on the order book front, we have seen good traction. But coming back to your question on, the funnel is still good. There is slowness. If I look at the average time taken to close in this quarter, it's been longer than the average of last year.
Okay.
So I think it is taking time. And once things begin to pick up, I believe the application side of things will take off. Then people will start to think about how am I going to deliver the connectivity. The discretionary spend is still low, which is where our customer experience portfolio will fall into, because the customer experience depends on how much marketing spend that the customers, B2C customers are doing, and authentications and so on. So that will somewhat depend on how the discretionary spend picks up. But since we have a broad set of portfolio, I would say our customer interaction portfolio is going to depend more and more on discretionary spend. Our IoT fabric will also depend a lot more on discretionary spend because they're not essential as people look to see how to bring more service monetization and how to deliver, not manufacture and sell products, but move to more service economy. That is where they will think about IoT and connected solutions and so on. So that I will park it in more discretionary spend. The network portfolio and our cloud and security portfolio will be more essential rather than discretionary. And there we would expect to see faster growth. So that is how I will largely describe how we see our portfolio spanning out based on the customer sentiments.
I've been noticing analyst commentary about these results. And one of the points that's been spoken about is the debt levels and how it's been on a decline. You want to add to that aspect and explain what is the future strategy?
Yes. I think we got our net debt to EBITDA to below 2, and we said we will be comfortable around the 2 region. Last year, as we ended the year, we said that our net debt to EBITDA went to 2.2, and we are still at that same place. Our debt levels went up because of the investments that we made. Last year, we called out that we made 600 million of investments, both on organic as well as through inorganic acquisitions. So some of the funding cost our debt levels to go up. In the medium term, we said that we will bring the debt levels down to below the 2 level. As we generate more EBITDA and cash, we will bring the debt level down. Having said that, we are on a mode of growth, so we will continue to invest. So even if I look at the Kaleyra acquisition that we did last year, our priority this year is to make sure that we bring all the synergy benefits. So we have multiple, engineering and multiple teams between what we had in our DIGO platform and the Kaleyra platforms. They're all coming together, so there will be some synergies. Similarly, there are platforms that we run around the world, and there could be synergies on that. So we will be working on synergy aspects and making sure that we take the synergies out. Having said that, we are also investing on that platform, right? So we said that the market is going to move away from SMS, and we already announced our capability, and we are in stage 1 of that capability, where we have announced our WhatsApp capability, our voice, email, including RCS. All of these products are in stage 1, so we are into a handful of anchor customers that we are doing with. So that's one investment that we're doing. The second investment that we would be doing is make it all more omni-channel and orchestrate across these channels and make them more intelligent. So we are investing in AI to make sure these channels, customer interactions can become more intelligent. So while we are optimizing and driving cost synergies, we are also investing in these products. And that is why it's a long answer to your question. That the reason why we say that even though we will bring our debt levels down, we will continue to invest in these portfolios as we go forward.
Are there any new capabilities that you feel the need to bring on either organically or through an inorganic route?
No, organically we are investing in many. So in our cloud portfolio, we have announced our AI cloud. We launched our Cloud Lite, which is our edge proposition, where we can put these edges in factories and stores and warehouses where some of the inferencing and decisions can be faster, lower latency, and all of that. So all of these are organic investments. We announced our SASE, which is how do you protect our customers as they go to internet and cloud and make it a lot more simpler for them. We announced a global SASE rollout in partnership with Versa. So these are all investments that we're doing organically. Inorganic is something that there is a team that constantly looks at what the opportunities are, and we would be very strategic about what we do inorganically. So we don't want to rule out and that we will not do it, but we will be very careful and strategic about inorganic.
Fair point. As we wind down the conversation, quick update on the partnership both with Microsoft and NVIDIA. How is that arrangement going?
I think the Microsoft partnership, we've had a very long-term partnership with Microsoft. They are a big customer to us, and they're also a big partner to us in the collaboration area. We announced a partnership in India. There have been some delays in launching the product, but we are very, very gung-ho about that partnership and taking that to market. As far as NVIDIA is concerned, things are going as per plan. We are beginning to build out. We've received the first set of NVIDIA chips for our lab environment, which we are building it out for some internal use and some select customer uses. But the big launch we anticipate will happen more towards the end of the year.
Okay, a big launch coming up towards the end of the year. I wish you all the very best for that. Thank you very much for your time with us, Amur. With that, it's a wrap on this conversation, decoding the first quarter results of Tata Communication. If you've been, thank you very much for watching.
Thank you.